we've seen in Asian markets this week, and there is also some uncertainty, political uncertainty, due to the resignation of Alexis Tsipras. So we're awaiting the opening of AFEX as well. For now, the frontline European indices are down nearly 1 to 2%. Manish Singh of Crossbridge Capital now joins us on the phone line from London. Hi Manish, what have you made of the carnage in global equity markets this entire week, and what's the way forward? Do you see much lower levels in store?
Oh, hi. Of course, it's been a very bad night and a very bad week as well, I should say. It seems the buyers are completely missing in the market. It is not unexpected wholly, but what is surprising is that it has been a slow grind down. So you've not seen a one-day move of 4 or 5% or like a one-week move of 10%, and things are slowing down. We had the European PMI number this morning in France, which is also weak, and we will get the German number in another 20 minutes. My view is that, yes, things are going to remain weak, so you will have a weak performance and weak equity performance going forward as well, unless and until we see some positive talk from policymakers or it gets to a certain level when it brings back the buyers. So it is going to be a weak market, a very sideways market, where you do not expect a big gains to happen anytime soon.
Hi Manish, good afternoon. So if the call is that it's going to remain a weak market, what would be your biggest worry? Would it be China? Would it be the Fed? Or would it be what's happening in Europe?
I think it's a cumulative effect of everything, really, because we saw the PMI numbers in China this morning, which was weak. I would add a bit of caution, because if you look at housing sector and the importance of property market in China, there was a stats out early this week which showed that the house prices are rising in almost half the market, 37 out of some 60 regions that they have. But the most important thing from that was that the number of new homes built has slowed down sharply, which just means that inventory is being run down. So as soon as the inventory runs down, you will have the new start in manufacturing and new start in making property and the combined effect of that. So it is likely that you might see the data gets weak in over next 1 month or 2 months, and then things start coming back in Q4. So that is a positive thing to bear in mind. In Europe, I would say ECB is very much behind I shouldn't say the market, but the economy in keeping things weak. And the next question is US. I was of the belief that US is going to raise in September. Now I don't seem so certain that they will do it. So let's see what Fed does. But it's a bit like a holiday market where there's not enough buyer. So the grind is very slow and lower. So let's see when it stops. But yes, you're right. At this moment, there's very little positive to see in the market.
How worried should we be about the political uncertainty in Greece because of Alexis Tsipras' surprise resignation? And will it have an impact on, the broader equity markets?
I should say that, yes, he had a great run in the last election where he won around 99 seats and plus 50 that you get for coming out of the majority party. I don't think that he's going to exceed that number, given that left-wing party is going to leave his coalition. Left-wing members will leave his party. But I don't see a constitutional crisis either, because remember, they have got the tranche of money which they're going to use to pay the ECB. The election is going to be in 1 month's time. The consensus feel within Greece is that, they want to stay in the euro, and they do understand that if they make any political error, then that could be very bad for Greece and Greek economy. So I still believe that they will form a sort of coalition. I don't think Tsipras' majority is going to increase any more than last time, but he will have support from the New Democracy and PASOK and others to form a government, which he's going to run just as he has run so far, and he has signed a deal with Greece. Because Greece did have an opportunity to walk out of euro in July, which they didn't do. So I doubt whether they will do it now. But things are going to be bad on economic front for Greece, that is for sure.
All right, and finally, just a quick last word on India. We're now inching closer, we've sort of erased all the gains for 2015. Do you see a lot more downside for our market from here on?
I do, and I remember our conversation a few weeks ago where I said that it is going to be the sideways market. You're not going to get a positive return. But every time it goes to 8,000 or something, you have to buy the Nifty. That's my view. So every time it gets there, you buy it again, but then you will have to sell it in short term because so long as the things with US is not clear, whether they're going to raise rates or not, it will have an impact on currencies. And as long as things are hanging over in China, it will have an impact on emerging market as well. So I think that you have to choose your levels to add, but then you don't see a sustained rally anytime soon.
Okay, Manish, always a pleasure to get in your views. So for our own markets, 8,000 is a clear buy level if we do head